$1 million. $1 million. It's not enough. It's not even close to enough. And I know what you're thinking. Lark, shut the heck up, man. What are you talking about? Of course, $1 million is enough. Well, I want to, in this video, lay out the case for why $1 million really ain't all it's cracked up to be anymore. And unfortunately, for a lot of people, you're going to have to aim a bit higher, especially if you want to retire in not poverty. So let's get into that in this video. Before we do that, if you enjoy this kind of content, whack that thumbs up button. Obviously, subscribe to the channel if you're not subscribed already so you can get more of this great kind of content in the future. So, $1 million used to feel like a lot of money. These days, perhaps not so much. We can thank inflation partially for that, but let's do $1 million by age. Now, let's assume that you get $1 million today. You get a call, your great grand uncle, 3 cousins removed, whatever, died. They left $1 million. And, well, I guess they left you $1.5 million because you have to pay taxes on that if you get it, but you get $1 million cash, tax-free, boom. What are you going to do? Well, a lot of it depends on your age. So if you just wanted to say, hey, you know what? I'm just going to take that money. I'm just going to live off of it for the rest of my life. $1 million, I'm set. I was told that $1 million is the number that I need to get to be perfectly set for the rest of my life. Well, $1 million by age, assuming that you live to the average age of 77. That's for the USA. Other countries have higher or lower rates. But if you want to live off that money without investing, we're not accounting for inflation in this conversation. We're assuming that there's not going to be any inflation because that money you might have later on could be worth a lot less, obviously. If you're 17 and you get that money, well, you're going to be able to take out $16,666 a year. That's almost poverty. Almost poverty. The poverty line's like $13,000. So you're close to poverty, not quite. You're just above poverty. Yay, I guess. Obviously, if you start withdrawing when you're 17 and you live till 77, well, those last 30 years of your life are going to definitely be in poverty because the inflation and the monetary debasement will basically guarantee that for you. What if you get it when you're 27? Well, you can pull out $20,000 a year. Still far from awesome, but hey, cool. I guess you're working a regular job and all that stuff as well. You know, you're not exactly going to be able to retire on that, but it'll help. 37, you get 25 grand a year. 47, you can pull out $33,333 a year. 47, still not great. 57 is really only when we start to get to a level where it's kind of okay. So if you're 57 today, you get that $1 million, you'll be able to take out $50,000 a year for the next 20 years of your life. That's about an average wage. Not bad. Not bad. That's okay. That's if you're 57 and you get that $1 million, it's going to be live offable. If you're 67, well, now you finally get $100K a year for the last 10 years of your life. Enjoy it. Enjoy it. Crazy, crazy stuff. Now, look, as you can see, if you only got $1 million at 57, that would be the only time you really can live an adequate life in that situation. Not awesome. Not awesome. And, hey, let's look at this. How much do you need to retire? At least $3 million. That's what people are starting to say these days. Need $3 million to retire. That's crazy, man. So that means that in your working life, aside from feeding yourself, paying your rent or your mortgage or whatever it might be, trying to go on a vacation once in a while, putting kids on through school and clothes on their back and all that kind of stuff, you also need to save $3 million or make that money through investing, which is really, as we're going to see in a minute, the best possible solution here for the average person wanting to not retire in poverty, because $3 million is a damn big number. Damn big number. And most people won't get there. But I hope that you will if you're watching this video. Now, let's dive in a little bit deeper here on this. So, you need to invest. You need to invest. And if you invest the money, that also means, and we're taking extreme examples here. We're assuming that you're going to not take any money out. Like you can invest $900,000, keep $100,000, still end up totally okay. But just for the example and the sake of ease of the examples here, let's assume you can't touch the principal. Okay? You have to take that $1 million. We're going to invest it all. So that's one. Welcome back to being broke. You'll need to keep working, but at least you have $1 million that's going to be making you more money for the future. So that's not bad. Second thing, of course, is, well, where are you going to invest that money? Well, what about gold? Gold's slow, it underperforms most of the time, and there are honestly many better places out there to put your $1 million than in gold, honestly. Not saying you can't put some money into gold, but 100%, in my opinion, would be crazy. I say that as somebody who owns some gold, by the way, but I don't think it would be where I'd put 100% of my money by any means. You want to do gold, go for Bitcoin. It is digital gold with a way better upside potential. I mean, 20x for Bitcoin, still not totally unreasonable to see that within the next 10 to 15 years. Certainly, if you're a younger age and you get that $1 million and you're thinking about retirement, Bitcoin may not be a bad way to go. But again, still be broke while you're waiting for all that to happen. You're not getting any passive income. Gold doesn't give you passive income. Bitcoin doesn't give you passive income. But the upside, if you do get Bitcoin, you're going to have, $20 million before taxes, of course, when you retire. So it's not bad. It's not bad. What about bonds? Oh, bonds. Everybody loves bonds right now, or a money market fund. Currently, the rates are good. We have to admit that. Currently, the rates are pretty good. Those good times won't last forever. Rates will come back down. It might not be for a few years. Maybe it's 2 or 3 years before we see rates come down significantly. And while these are generally low risk, most of the time, with bonds, if you're thinking, okay, that's my long-term strategy for I'm going to put my $1 million, most of the time you're not going to get decent returns of that money. Currently, it's 3.87% on a 10-year bond. So that's $38,700 a year for tax, obviously. Even if you're compounding those gains, it sucks. It takes 15 years for your $1 million to double to $2 million, assuming that the rates stay that high for that long. Short-term money market funds offer better rates. Right now, we're seeing up to 5.25% at the top, most of them around 4.7 to 5. But let's say top rate, okay, you're getting $52,500 a year before tax. After tax, about $40K. Not terrible. You could definitely live off that money. Wouldn't be living like a baller, but you'd be able to live off of that money, sure. That's $769 a week. Basically, a little bit below the average wage. Not terrible. Not terrible. But again, we're talking temporary stuff. Rates could be back down dramatically, and you might be getting $10,000 a year in 2 years, for example, with a money market fund. What about the stock market? Well, stock market's definitely, if we can assume any kind of future potential for historical returns to continue, then yeah. So if you invest $1 million in the S&P 500 today, and you leave it in there for 30 years, then you will have $2 million in 7 years, assuming a 10% annual return, which has been the historical rate of return for recent decades. $20 million in 30 years. And if you can go 40 years, you can live a bit longer, you'll have $54 million. So let's say that you are 27 now, you get that money, you throw it all into the S&P 500, and you just wait. You don't touch it until you retire. Well, you're going to have a lot of money there, assuming returns continue in such a fashion. You're going to have tens of millions of dollars, and you're going to be able to live your retirement like a baller. Still need to work, though, throughout your life. Unless you want to start drawing on it. Maybe you leave it in there for 14 years, and now you have $4 million, and you start withdrawing 4 or 5% a year, for example. You're still going to grow. You still get some more money in your pocket. Not bad. It's kind of a retire early scenario, so to speak, or at least not retire early, but maybe do more of what you want. You still want to keep active and do stuff, right? Now, as Nicole Mann points out here, you've uncovered a good option with the S&P, but investing 100% is perhaps too basic. What if we could divide it up, some into staked Ethereum, some into the S&P 500, some into tokenized real estate, some cash for crypto plays? And I think that points out a very simple reality is that you would be unlikely to invest 100% of that $1 million into any one of these things. You'd probably put some in a money market fund. You'd probably put some in the S&P 500 and some in Bitcoin, whatever. You'd have a few different things moving, a little bit of diversification. But still, those examples let you understand the potential here for some of these things and where your money might be better off looking decades into the future, assuming, of course, any potential for historical returns to repeat, which they don't always in markets, but just some food for thought there. Now, before we get into the inflation dilemma, I just want to let you know what Wealth Mastery is, my weekly cryptocurrency newsletter. It's freaking awesome. Best damn newsletter in the Web3 space. Every single issue jam-packed full of alpha. We cover all the latest happening in the industry. We cover altcoin alpha, altcoin reports, DeFi tutorials, what's going on with NFTs, technical analysis, and much, much more. You can sign up for free and join our 75,000 weekly readers by using the link down below in the description. Look, our team spends like 40 hours a week, every week putting this together. You can read it in like 10 minutes. Check it out. Link down below. Now let's talk about the inflation dilemma, because this is a real problem. all the numbers we discussed before are undone by inflation. That $1 million, when I was a kid, let's do story time. When I was a kid, back in the 90s, I imagined $1 million as some kind of real amount of serious money, like $1 million. That $1 million that I imagined back in the 90s is not the $1 million of 2023. Far from it. You would now need to have $2 million to have the same purchasing power of the $1 million that I imagined as a kid back in the 90s. We've had that much monetary debasement between now and then. And I would suspect if you fast forward another 20 or 30 years, that $1 million that you imagine today is also going to be worth half as much in terms of purchasing power, which is crazy. So that means all of the numbers that we've discussed so far are undermined by the reality of inflation. If you just take that $1 million and just try to live off the money, you're screwed. You're absolutely screwed. Inflation's going to get you. If you try to put it into something that doesn't keep up with inflation, you're going to be screwed. Now, gold sometimes can have great rallies. It can also really lag sometimes for decades. So it may not be the best area in that regard. Bitcoin has a great potential future. The S&P 500 does beat inflation. So even let's say you take that example where you have your $1 million in the S&P 500, it turns into $20 million after 30 years. Same with Bitcoin. Let's assume a 20x return. Well, that $20 million, so you get 20 million notes of dollars handed into your hand, it's worth half as much as that you imagine it now. You're still doing great. You still have the equivalent of $10 million of today's money. So that's something to consider. Because inflation is going to be a big, big picture of any $1 million scenarios here, right? So definitely keep that in mind. Plus, these days, apparently, you have to have a few $1 million in the bank to even be able to get a girlfriend, man. Come on. Ay. Everyone, we're screwed. The future of the human population is in trouble. You gotta have a few $1 million to get a girlfriend, guys. Of course, I know this is just extreme social media BS. You know, it's not necessarily worth paying a lot of attention to, but I think that's quite funny. Nevertheless, guys, here's a word of wisdom from old man Lark here. If you're on a date with a girl and she demands that you have millions of dollars in order to be her boyfriend, get back on the hunt, man. That's not the right one. Holy cow. So I know now you're thinking, well, Lark, that's some interesting information. What do I do? I think the obvious answer here is you have to invest. Simply working a regular job and saving money, you're going to be screwed. If you do get some kind of, windfall amount of money into your pocket, you have to invest it or you're going to be screwed. Inflation's going to take your money away. You're not even going to be able to get a girlfriend, guys. Come on. Sitting on cash is a melting ice cube. And look, I know strategically there are times to be in cash. If you're trying to time the market and all that sort of stuff, there are times to be in cash. There are times not to be in cash. If you're just a long-term investor, you set it, forget it, you throw your money into Bitcoin or you throw your money into an index fund, you can just sit back, relax, and let that money grow over time and try to ignore the ups and downs of the markets. Because 10, 20 years from now, you'll be fine, no matter what happens over the next week, month, or year. Long-term thinking tends to work out very, very well in markets. Also to consider is that in this scenario, you're probably going to need to keep working. Even if you got that $1 million today and you invested it, whatever, you still need to keep working. You still need to keep putting the bread on the table, keep feeding your kids, all that kind of stuff, and keep building your wealth long term, because wealth is not a destination. And getting $1 million is a destination for a lot of people, but wealth's actually a journey. Money is a journey. Investing is a journey. And it's something that you'll need to practice as a form of almost financial meditation for the rest of your life. And when you take that approach, well, you're never going to be broke.